Okay, so this video we are going to be talking about supply and demand. So, supply and demand refers to areas in the market where sell orders and buy orders are accumulated. Now, the market moves because of supply and demand. Okay, when the market is moving down, it is because supply is pumped into the market. And when the market moves up, it's because the demand for a specific currency is up. So, for example, when GBP USD is up, that means that the demand for the pound is strong. And the demand for the pound is stronger than the demand of the US dollar. So then the market drives up. So a demand zone is an area where buy orders are accumulated and an area where institutional players are actually looking to buy the market. A supply zone is the opposite, where the market sells off from. And it's an area that institutional participants, so banks, institutions, trading firms, the people with the money to move the market, supply zones are the areas they are looking to sell from. So they're very useful, they're very important in our trading, and definitely something that we should get down and something that we need to talk through. So I'm going to show you in this video how to plot supply and demand, how to find supply and demand, and how to then use it in your trading for accurate results. So we'll start out with, shall we start with supply zones? Because I can see some great examples here. A supply zone then is, of course, an area that price sells off from, and we identify them by finding large uninterrupted movements in the market to the downside. So, like this, we see a big downside movement in the market with, little standing in the way. Okay, it pretty much just shot straight down. Now, what this shows us, the fact that this movement happened so fast and uninterrupted, it shows us that there's a lot of selling pressure in the market. There's a lot of strength to the downside. There's a lot of institutional players, the market participants with big money, actually selling the market from this point, because that is what actually manages to tank the market so much. So we've seen a big uninterrupted movement, and we can see we just have this little consolidation box at the top. Now, this consolidation box at the top, where these sell orders were accumulating before they were pushed into the market, is our supply zone. So what we want to do is mark that zone. Now, you can be selective on how you mark your zones. Some people prefer to mark them with wicks included. My favorite way to mark them is to mark just the candle bodies. Okay, so if we have the candles like this, we can see, this is the main area of consolidation. Of course, we do have the wicks as well. But focusing on the bodies mean if we actually don't surpass the candle bodies, like this, for example, where we had, right, say we've got this zone marked, we see price pushes into this level, reacts like this, but we don't actually push over the candle bodies. That means that supply in this zone is very strong, because we can see that the price isn't even willing to pass the initial consolidation area before the market sold off. Okay, now this would be just as valid using the wicks as well, as would this. However, for the most accurate pinpoint results on your supply and demand zones, you are going to probably want to just focus on the most obvious consolidation zone, the candle area, the candle body area, sorry. So there we go, that's the supply zone. Now, what happens when we re-enter that supply zone? Well, you can see there, we trade into it, price gets pushed back down, rejected, and then falls off. So it shows us that the selling pressure is in this area. Okay, we traded back into there once more, and then as soon as we tapped into that level, the market tanked down. So this becomes a good selling point. Now we have a few more examples of this with these big and uninterrupted downside movements, which lead into selling opportunities. So here's another obvious one. Consolidation zone, large uninterrupted movement. We trade higher, we trade back into that zone. The market fails to close above. The wick pushes us back down. This would be our selling point, or even in here, if we were accurate and fast enough, and then the market pushes down. Okay, so there we go. We can see a few examples there of supply zones. A few more here. Let me just talk through a few examples. Large downside uninterrupted movement. Price trades back into the boundaries of the consolidation at the top and pushes down. And essentially, this time here, failed. But once again, as we can see, large uninterrupted move down. Supply zone. Trade into, consolidate, and then we begin to push down. Now, in this example, we pushed through. Okay, and this push through indicates that the buying pressure is actually strong enough to take out the level. So we can see then after we had that big run there, the market actually pushed through the level. So supply and demand isn't going to work 100% of the time. Eventually, supply and demand zones will get pushed through. It is, usually when we get a fresh reaction like this one, fast move down, fast move back up, fast move down. So that is a nice selling point out of this zone. Now, in this instance, we did see that price spiked all the way above these previous two zones. So seeing that the market has the strength to go over there should indicate to us that we shouldn't really sell from here. Now, this all comes back down to the market structure approach, looking at how the highs and lows react to each other. Okay, if we see that a higher high formed here by pushing through these two levels, well, that tells us then that the market structure, the trend structure, is essentially up. So while we actually did close back beneath this level, the fact that the market could get there at all should tell us that there is strength in this market. So there you go. That is supply zones. Basically, these areas of consolidation before these bigger downside moves, of which the market trades into and then sells off. Now, demand zones are the opposite reaction of that. Real quick, I'm just going to show you. Here we have a couple more supply zones. Sell off, trade back in, sell off. As long as we fail to form new higher highs, which as you can see, we did fail to do, we didn't get over the wick, then we are cool to actually then look for sells from this area. Now, once again, then from that second selling point, we formed a new supply zone. Big sell off, trade back in, tap in, sell off again. Okay, so that is supply zones. Now, demand zones are essentially just the flip side, the opposite side of the movement. We get these uninterrupted bullish movements, these large bullish candles that shows a lot of buying pressure in the market. And what we can do then is plot that consolidation before the market moved and use that as a buy point. So here we have uninterrupted move, market drives up. Shows that the market is actually moving out of this consolidation area. Now we trade back into that level, tap just into it, and then the market buys again. This next reaction also formed a demand zone, an even more favorable demand zone. Here, where we see consolidation, large uninterrupted movement, market comes back down, trades in, it turns into a buy, turns into a buy, turns into a buy, and bam, off we go. The market goes higher. So another example would be this area here. We form consolidation, go to the upside, come back down, retest, bam, off we go again. Okay, so demand zones are essentially exactly the same as supply zones, but on the opposite side of the movement, right? Another one here, very nice one here, in fact, where we have a mid upside move consolidation. So we have bullish move, bullish move, bullish move, consolidation. And what this consolidation here shows, I won't get too deep into this, might get a bit confusing. What this shows, we will be talking about accumulation and distribution in a bit though, so I will get onto this, is orders accumulating, right? When I say accumulating, I mean people stacking orders. So, for example, we've got buyers, right, coming into the market, and that is why these candles are moving up. So the buyers are pushing this market up. Now, when we get to these red areas, this is areas where the buyers are actually releasing their buying positions. Okay. So, for example, people from this movement will be taking profits. Others will be re-entering. And the accumulation of orders here, where people are taking profits and others are re-entering the markets, forms an accumulation. So when the orders are accumulated and there is enough strength in the market, it will then make its next move to the upside. So this is actually an area of demand then where, we've had people taking profits, the market begins to slow down, but then enough institutional players actually accumulate orders in this point that it sends the market flying. And when we see that that market has flown from this level, we can then focus on this level again as an area where demand is accumulated. So then when price is traded into this region, as it has here, we see a pinpoint reaction which sends us into the next buying phase. Hopefully that makes sense. So there we go. That is supply and demand, just how to plot the zones, what it shows, and how you can actually trade it. Okay. We will get more into supply and demand a bit later on when we talk about bringing it into the processes, but that's how it works. Now, there are a few ways that we're going to use supply and demand. First of all, for entries, the examples we've just spoken about is examples of using supply and demand for entries, right? We know supply zone is going to be a good entry for a sell trade, and demand zones are going to be a good entry for a buy trade. So this is not the only way that we can use them though. We can also use them as targets. Okay, so let me show you an example here. We've seen this very clear demand zone, big bullish uninterrupted movement, consolidation just before the market took off. So what we're now looking at is a market that has, if we see this big red candle, has pushed beneath the previous 1, 2, 3, 4 candles, or 1, 2, 3 candles, and is actually beginning to make a bit of downside movement. So if we scale in, we could look at this market with a market structure approach. Now I'm going to look at the 30-minute chart. This is just off the top. I've just spotted this. I'm trying to work with what I've seen. So bear with me. But basically then, we have that zone that we marked out. We know that this is a demand zone. Price is likely to turn into a buy from here. And if we were trading the higher time frames, sure, that's where we would look for. We could wait for price to trade into here and then buy. Now, what we're actually doing is scaling in and looking at the lower time frames. If we look at the market structure then, the higher high, higher low. So what do we have? Higher high, higher low, higher high, higher low, high high, higher low, high point, lower low, right? We've pushed through the lower low there. We've pushed through that higher low, forming a new lower low in the market. Now, I'll just switch it over to the line chart to make it nice and simple for you to see. Higher highs and higher lows. Then we have this low point, which forms in here. Have the high point, which forms right there. And then the market pushes through, forms a lower low. The market then comes up, forms a lower high, and begins its descent downwards. So this is going to provide us a shorter term selling opportunity. Okay. So switching it back over to the candles. Let's say then we want to sell the market into this point, right? We know the market structure is suggesting that it could move down, but we don't know where to target. Well, if we use these supply zones and these demand zones, we can actually use them as targets, right? Because we know that price is going to be magnetized back to this level. We know that people are looking to buy from this point. So where's the first stop we should go? Whether or not we're going to bounce or break through that level, we can pretty much assume that the market is going to run into this level of demand. So there we go then. If we were to look to sell this market down, just here on the 1 hour chart, let's say we want to sell this market down from this lower high, we can then actually just watch the market come all the way down and trade into the demand zone that we had plotted on the chart. Okay, so we can use them as targets as well. It's not just going to be a case of using them for entries. When we can scale in and use these lower time frames to use that market structure, we can actually then begin using these as targets. So hopefully that made sense. Hopefully that has opened your eyes to how we can use supply and demand zones as targets. Now let me show you an example on the flip side of that, where we have a supply zone, which we can use as a target. Right, so an example here then could be, let's have a look at GBP USD in this area. Right, very clear supply zone on the chart there. Okay, big uninterrupted move. Doesn't really get much better than that in terms of accuracy with supply zones and strength of supply zones. So right now the market is continuing to form lower lows and lower highs, and we have no indication to actually buy this market. However, if we were to see the market structure change like this, where we see these lower lows and lower highs turning into a higher high, we could then actually look for higher lows to buy the market up into that zone. So for example, maybe this level here could be a nice resistance point to buy the market up from. Okay, a resistance turn support point that we could buy the market up from. So focusing on this, we see that the price maintained that level, now is forming higher highs and higher lows. And where can we actually look to as our target? Well, we can look towards that supply zone. Okay, so then allowing price to make its movement, we see it trades into there before swiftly falling off. And that is then going to be our target point for a buy trade, right? And we saw, a few examples out of here where we could have used this as a target inside of this structure as well. So that's how we're going to actually use supply and demand zones as targets as well as places to enter our trades. We know that price is magnetized to these levels. So if we have a clear level, a clear zone like this, we can pretty much expect price to go and trade back into it to provide us with a target for our trades, and then an entry on the higher time frames, on the more scaled out view, an entry to a sell from a supply or a buy from a demand zone. So hopefully this video has been useful. This is the next step in the market flow. Now let me just quickly recap. We've spoken about market structure, which we of course just covered then. That is the backbone of all of our trading. Key levels, where we are going to want to use these key levels as magnetization points. Now, this is something interesting as well. We said that price accumulates and distributes and prepares orders around these key levels? Well, if we look, where is the supply zone consolidating, right? Right around the 1.30 key level. Okay, so we've got here the key level and the supply zone both in line with each other. So, yeah, there we go. That is pretty much it for this video then. So, yeah, market structure, key levels, and now supply and demand. Okay, everything is coming together. This is how we gauge the overall movement of the market and where the market is going to go. We are going to talk now about a couple of interesting things, moving into liquidity and momentum and also price imbalances. So those are the next few videos, and after we've spoken about all of those, you're hopefully going to have a much better view on how I view the market and how you can actually read the market for yourself. So I'll see you over in the next video. Do a bit of homework. Go ahead and try and plot some of these supply and demand zones. Now, when you first begin, they can be very difficult to identify, but you are going to actually learn a little bit more about them if you actually just go out there and use the market, the past price data of the market to try and plot your own zones. It's going to take some time. It's going to start out difficult, but you will get the hang of it. And when you do, you're going to spot them second nature. So the next video is liquidity. And now liquidity is very, very important, something not massively covered and super, super important part of our trading strategy. So without further ado, let's dive over to that video, do your homework, and then I'll see you over there.